you could be possibly having your best time in the trading industry, like having your best win rates, getting into your best winning streak in the trading industry, but then all of a sudden a little mistake can actually drag your whole winning streak back to a losing streak. So in today's video, I'm going to share with you some of the 5 most common trading mistakes that you need to avoid at all costs if you really want to stay as a profitable trader. Note, avoiding these ones doesn't mean you won't lose some trade. You will still lose some trade, but then avoiding them will simply means that you have a clear thing you are doing, you know what you are doing, and it will also keep you on the right path to becoming a profitable trader over and over again. On this channel, I mainly focus on how you and I can actually make money from crypto, forex, and stock trading. So anything that will make you money from these 3 industries, I make sure I share it here on this channel and also on my Telegram channel, which will be linked down in the video description. So with that already said, let's get straight into today's video. Let me share with you this top pitfalls in the crypto, forex, and stock industry that you need to avoid if you really want to stay as a profitable trader for a long term. So the first point we have on our list is actually winging the market. So what do I mean by winging it? Winging it simply means most of you are trading without having a clear trading plan. So what you simply do is that you wake up in the morning, you get on your computer or on your mobile phone, whatever platform you're using, analyzing, you get on it, you just open up the chart. Maybe you just wake up and then you don't even have any pairs you trade in specific. You just go into the market, pick out any random pairs, and then you don't have any plan. You don't know what is going to trigger your entry point. You don't actually know what is going to determine your stop loss position. You don't even know what is going to determine your take profit position or which strategy exactly you want to implement in the market or what you need from the market. All you simply do is that you just get on the market and then start drawing some unnecessary lines, lying to yourself that you have a strategy. Meanwhile, you don't even have any clear plan at all heading into the market. So one of the biggest mistakes you can do yourself as a trader is simply not having a trading plan. So I believe you've often seen so many people trading, and you see them analyzing. They analyze the market so easily. Like if you watch my live streams that I used to do some time ago, that I'll also be doing when I fully recover, is that you see me analyzing the market. I just open up the chart, I know what I'm doing, I just go straight to the point, identify my patterns and everything, and know where I'm going to get into the market and where I'm going to get out. It looks easy when I'm live streaming or teaching you on the channel, is because I have a clear plan, and when I get on the chart, I always focus on that plan and nothing more than that plan. So if you're a trader out there watching this video and you really want to be a profitable trader over and over again, one thing I would advise you do is simply have a clear plan, focus on that plan, and make sure you don't go against that plan. Because the day you start going against that plan, that day will actually be your doom day. So just have a clear plan that, okay, this is what is going to determine the strategy I'm using. This is the strategy I'm using. This is what is going to determine my entry. Like for me, when I'm trading, I trade trend lines and then support and resistance retest. So once I have all of this, one thing I normally do is after drawing my trend line and everything, I patiently wait for the market to come back to the trend line position and then break above the previous high or low. Then I get into the market, and then if it's for support and resistance levels, I wait for the market to break out of those areas, come back to retest them, give me a rejection. Then I get into the market. Until this pattern has been confirmed in the market, I don't trade it. That's why recently, if you've been following my Telegram channel, I do drop some signals. There are times I can tell you that I want to drop signals, but then for the whole week I won't drop the signal till maybe Wednesday, Thursday before the signal comes out. This is simply because I'm waiting for my strategy to play out. I'm waiting for my plan to play out in the market before I actually drop it. The point number 2 is simply the act of overtrading. So overtrading simply means when you try forcing trades that are not there. Like for example, you get on the market and then you see the market just moving sideways, but then you got a little timid and then you wanted to force trade, so you have to go to a lower time frame and then force unnecessary trade that are not there. Now, one thing I have to tell you as a trader is that if you really want to be a profitable trader for the long term, one thing you need to avoid is that you need to understand the fact that you are not going to get good trade every single day. You are not going to get good trade every week. Like I can go 1 week, 2 weeks without even placing any trade and I will still be okay. The reason is that one thing that makes me happy is that number 1, my capital is being preserved. Number 2, I have setups that when they get triggered, I know I'm going to make any amount of money that I've probably left behind. Like for example, here's a trade I took on an NZD card. I made a setup, as I said, I made a setup on Monday, had to wait till Thursday before it got triggered, and the market went to my take profit smoothly. So do Australian dollar chef. Why? Because I had the patience to wait for my trade to actually mature up. So some of you, one thing you do is that once you make your analytics, like for example, when I woke up, I did my analytics on a higher time frame. I had the bias that the market is a short market. But then during the process of waiting for this market, the market was actually taking a minor uptrend. So during that minor uptrend now, what most of new trader does is that they'll try jumping into the market instead, because they want to take as much trade as possible to make more money. Like earlier on, someone asked me that if I know the market is going to trade from this area to this area before coming downwards, why don't I trade it upward? Now this is the psychology of trading. If I come up with the idea that I want to trade it to the resistance area before placing my short order, it simply means that I'm trying to take trade that are against my strategy, and this one thing that leads to overtrading. So if you want to make profit in the forex market over and over again, forget about the market, forget about the money, focus on the principles, avoid taking unnecessary trade, and only wait for your setups to play out and execute them. That's simply all I have for you in the point number 3, because once you try taking too many trades, you end up taking the trades that are going to blow up your account, and you start losing. Once you start making serious losses, you start losing confidence in the market, and that will actually lead you to be among those who say forex or trading is a scam. The third point here, flying blind. So what do I mean by flying blind as a trader? Now what I mean by flying blind is simply getting into trades without doing any research or any analytics. So one thing that will actually lead you to a lot of losses in the forex market is when you don't know how to read the chart. Reading the chart is one of the most important things that you need to take serious as a trader. So most of you, like I met someone who said he wanted to get started with trading, and then I was like, okay, you want to get started with trading, have you done any research about the market? He was like, no, he has been playing with a demo account, he knows how to place a buy and sell order. I just laughed inside. The reason why I laughed is that I knew he was already on the wrong path. So I was like, no, if you want to learn trading, it's not going to play with a demo account. No, you haven't gotten to that stage. There is a stage whereby you have to pass before getting to that particular one, and this particular stage is simply learning how to do your own research about any particular market, and then knowing how to read the chart before getting to play with a demo account. And this is the thing that leads to the idea that you make more money from trading demo, but when you move over to a real account, you find yourself losing. This is because on the demo you were flying blind, and then you want to also continue this blind attitude on your main account. And trust me, when it comes over to your main account, you get a lot of emotions attached, which is totally different. So if you want to get started with trading, or you are already a trader finding yourself losing, I want you to sit back, like really sit back, look at the chart, and tell yourself the truth. Can you really look at the chart and tell what is going on? Can you just take a look at what the past 4 hours has been doing in the market and say, will the market go bullish or bearish? Can you look at any time frame and then decide what is going to happen on that time frame? If you sit on the chart and then analyze everything I just told you right now and realize that you can't even give any idea, then know that you are not a trader yet. You need to go and do your research, build up a strategy that will help you easily identify the market bias. Like for example now, if I get onto the market and I want to do analytics, the first thing is that I'll go over to the daily time frame. The purpose of me going to the daily time frame is that I want to look at the overall market trend. I want to know where the market is going, and this is what we call reading the charts. Because once I look at it right now, like take a look at this is NZD card, and when I look at it right now, someone will say the market is going bullish because the market recently got to the 0.80784 position, then it started going upward again. Someone will say bullish, but I will tell you the market is still bearish. Why will I say the market is still bearish? Because what the market did was that it bounced off this area here, which is the current lowest point in the market, just to come and create a newer lower high, so that it can continue its downtrend. And if you look at it carefully, after the market came back to take at this previous support area, it's coming back downwards again. Even though they still have a bullish candle, there's still more bearish momentum in the market than a buy side. But then a blind person will say, oh, I'm seeing a green candle, so let me get in. So now when you are trading a demo account, once you see this green candle, you get in, and maybe this green candle can just push up to the nearest swing position there on the lower time frame, and then boom, you made some profit in your demo account, you close the trade, and then you'll be like, wow, I'm getting good at trading. And then you bring this to a real account, and then go and do it at the wrong position, and then you find yourself losing. So if you really want to get yourself into trading and then make a huge profit from the trading market, one thing I advise you to do is that try get a mentor. If you can't get a mentor because you can't afford it, just do like what I also did. I couldn't afford a mentor when I was starting off. So what I did was simply doing my own research every night and day, watching several YouTube videos, but making sure that the profit people are making from trading don't get over me. So I simply watch a lot of YouTube videos, read a lot of blogs, get ebooks and read, and all of this was actually what actually helped me because I couldn't afford to pay a mentor that will actually put me through. So that's simply all I have for you. The point number 4 here is simply don't fly the market blindly. Have a clear plan, know how to do your research, and also know how to read the chart before you place any trade. Like for me, before I place any trade on any market, I do my own research. I try to know what will affect that particular market. I'll go and check news channels like at times in the morning I do watch early morning news concerning to see if there's any probably any war going on, anything going on within the countries that I'm actually trying to place this trade. Because when you're trading Forex, you're actually placing a trade between two nations, and you need to know if anything is happening in those nations that might affect the economy. Another thing you do is that you can check Forex Factory for those trading Forex, where you can see if there's any high impact news on your particular pairs, and so forth and so on. There are a lot of things you can actually do to actually know, to get a first sound information before placing any trade in the market. The final point in this video is simply avoiding stop positions. So what do I mean by stop positions or stop orders? So what I mean by stop order is simply a stop loss position and then a take profit position. These two positions are very important in the market as both of them can save you either way. So for example, a stop loss position can actually save you from getting into too much losses. Like for example, if you get into a market and then based on your account size, you say you want to risk just $100 or $200 for that particular trade. Now, your stop loss position can actually help you fix in that. Okay, you are telling the broker that, like for me, I use Trade Locker. So for example, you want to say, so now what you're actually doing is that when you set a stop loss position is that you are telling the broker that once the market gets to this particular point, get me out immediately so that I don't have to lose too much. And then the second one is that a take profit position. A take profit position is simply telling the market that, okay, once you get to this particular price here, close it and then save my profit for me. Like taking the same trade as an example again. I'm really using this trade to oppress you. So now taking this trade as an example again, take a look at, let me draw it a bit below. Okay. And then get this somewhere here. Close off on this RSI indicator. Now take a look at what happened in the market here. You can see I had a stop loss position at the top here, which is at a 0.81767 as my stop loss position, and then I had my take profit position at the 0.80784. Now, why did I take this area as my stop loss position, as my take profit position? I consider this area as my take profit position because it's the nearest to the lowest key level here, the lowest point in the market here. That's where it's very close to it. So I had to mark that area out and I see it as my area of what? Take profit. Because once market get to key levels, they are likely to move against you again. So now I had it, and you can see what the market did. Immediately the market got here, then it bounced off immediately. So let's say I did not set my take profit here, and then I wasn't looking at my chart by the time the market got here. What would have happened? The market would have pulled back to this area, and see, look at the pips that I would have been losing out on. That could have even added up to my profit to give me more gain. And on the other hand, take a look at the stop loss position. With this stop loss position, if the market has gone against me before, maybe the market decided to change direction from here and then decided to continue its upward movement, then the market would have saved me from getting more losses. Because if this market should continue its upward movement, the next place whereby it might go and find a key level is at the 0.82258 level, and that will actually see me into a huge loss. So now when the only way I could save myself from getting into this huge loss or missing into my profit was using a stop loss and take profit orders. Whenever you are placing an order, always use a stop loss and then a take profit position. And then when you are setting this position, make sure that you are setting them at realistic positions in the market. So I have already created a video on how to pick a perfect stop loss and a perfect take profit position, and I'll be linking to both of them down in this comment section. So check the video comment section, they will be there, and also the video description, I'll tag them in there. So with that already said, hope you find this video helpful. Don't forget to smash that subscribe button. Also join my Telegram channel where I do drop free Forex signals, and I'll be adding crypto signals for those who also trade crypto as well. So with that already said, have a nice day. Bye.